Alrighty, we are live. It is Tuesday, February 14th. It's about quarter after 2 p.m. Eastern. I'm Ted with the Crypto Flight Path. Our esteemed colleague Josh is not going to be able to make our session today. He is traveling, and we wish him a Godspeed in that endeavor. Before we get started, just remember, do your own research. Take everything we're saying with a grain of salt. It's not financial advice, et cetera, et cetera. You know the drill. Before we get into that, what we're looking at today is we had our CPI print, right? Basically in line with expectation. I don't think markets reacted too terribly to that, but it's something that is or to me, is a confluence of events where this whole week there's a bunch of Fed talking heads combined with some brief history with FOMC raising rates by 25 basis points, Powell getting on TV after that, about a week or several days later, the SEC then beginning to take some enforcement action against Kraken and the like. And I have to say that I don't think that that's about to stop anytime soon. We'll jump into some news slash other things to sink our teeth into and feast our eyes on. In terms of equity markets, I think the reaction here is pretty muted. Uh, I'll argue that this whole CPI business was probably largely priced in. Easy to say that after the fact, but I think that it was interesting just anecdotally to point out that uh, as many people that I follow on Twitter and had the random sampling of those that were very keen to remind everyone who follows them that CPI was coming today, to see that it didn't really send us into a tailspin. I mean, we're right basically at the close yesterday across the board, with looking at the Dow, the Nasdaq, and S&P 500. A quick peek at futures, it looks like, you know, this this whole month we had looking at the Nasdaq here, we priced in like the potential to go higher, and then we've been drifting back down as we got the rate hike was less than, being less than 50 basis points certainly didn't hurt. And then the SEC doing its thing. I don't know that it generally would affect equities in the same way, but the point I'm trying to illustrate is that the I think that some of the sentiment that I picked up on, or things that I picked up on in the context of like how people were feeling about it, the inflation narrative, that it's hot, it's heavy. It's still hotly contested about, or around, like what CPI means and like what it really is, and whether or not it's accurate or not. But anyway, the inflation narrative aside for a second, it doesn't look like things reacted too terribly to the news. Taking a peek over at crypto prices, it looks like we got a little bit of perking. We're perking up a little bit in some areas. Like, for example, we'll get into some other charts, but just this finviz.com site is a great way to look at stuff in aggregate and look at how things are moving, like in broad strokes. Looks like Litecoin is actually the biggest one-day relative performer here. Litecoin versus dollar in this chart. Uh, Other things that are on our radar to look at, I think that may help, or that may back up this idea that we're not really out of the woods yet, concerning the war on crypto. Or maybe said another way, is that from a regular, like the current administration is putting up a little bit of a fight to make it difficult for the crypto industry to operate and function. And it's to me, it's interesting because there's, in my or from my perspective, there's a lot of interest in this everything that makes up crypto, the tech, the finance, or the technical aspect, the finance aspect, being the future of money, all these great things. But politically, it's still the boogeyman. And I think it's just real life that until this regulatory fight, or until the political conditions change to the extent that politicians can talk about it without fear of their constituents revolting, then it's going to be a bit of a headwind. And where I'm going with that is there's an article here. Well, first of all, cryptopanic.com, really like it. And I'm starting to see some things or starting to pick up on some things that sort of support this idea that the administration is positioning to uh, do a couple of things. And one of them is this Lael Brainerd, which is she's the vice chair of the Federal Reserve, is being nominated to be the Biden administration's top economic advisor. And it's no secret if you take 5 minutes and Google this person and look at their stance on things. It's in bold right here, anti-crypto position. Uh, the, the Federal Reserve, for all the obvious reasons, has to be very careful about what it says and when it says it. But I think that this article, and then over on Cointelegraph, uh, it's the same basic news, but a little bit a slightly different. Um, it's portrayed a slightly different way. There's a little more context, and so what I'm picking up on here is that this the big bad CDBC uh, thing that terrifies some folks and other people don't have the slightest idea what's going on. I'm painting the picture in my own mind that things like Brainerd being nominated for this role, their stance on crypto, their stance on CBDCs could potentially be a headwind as we get further into this year, in being a small slice of the bigger macroeconomic picture. And then speaking of headwinds, we'll hop over to the economic calendar. Today, after CPI, today alone, we had three talking heads: Fed, Logan, Harker, and Williams. It looks like we missed the Williams speech, but what we're keen to understand is that from a posturing and positioning and the role that the Fed is, the scrutiny that the Federal Reserve is under, really the government, or the federal government, the Biden administration is under, to tackle this inflation problem. Uh, People are allegedly scared of the uncertainty. Are we in a recession? Am I going to lose my job? Are the things that I need to survive, like milk and eggs, all of the usual suspects that show up in these reports in the mainstream media, like milk and eggs? I mean, we buy more things than milk and eggs, quite frankly. But those are easy. It's easy to cherry pick those because they are more expensive than they have been historically. But the narrative is not why. It's more just, this is what's happening, and you should be afraid. Now go buy more stuff. So, and that shouldn't be a secret to anybody. But what I'm trying to point out here is that today and tomorrow, we've got the retail sales numbers, housing data, and gas and oil, and then bringing it home on Thursday with PPI, the Philly Fed, and then we've got Mester from the Fed. We've got Bullard, Cook, and Mester again. So Mester's going to talk twice in the same day. So I think, and then, gosh, when does it ever end? Okay, on Friday we kicked the day off with Barkin, and then the Baker Hughes stuff, which doesn't really. There's a whole nother can of worms. We won't even really get into that. So what I'm trying to point out, and I'll switch over to the chart. What I'm kind of paint a picture is that, like, looking at the ETH USDT, we've been tracking the events over the last several weeks and watching price action bounce off of this like 1680 level. Effectively, it got rejected one, two, three, four times. I'll try not to sound like a broken record, but just to reiterate, uh, price has not been able to poke through and go into price discovery mode above this level to see where the market thinks it should land. We saw after the SEC madness, we pulled back, broke down below this line, and then started to settle lower. And it looks like the CPI number was not meaning it's not a surprise. But what I'm interested to point out here is that even with it being in line and not being a surprise, we still, like today's price action, we rose, we got back up to the lower of the blue wedge line here and stopped. And the question I'm asking right now is like, well, that's great that it didn't puke lower, but why isn't it going higher? Like, what's missing? That's the question I'm asking. And this this short position box that we have described here is still an active trade. I mean, we're not wrong until we get stopped. So I'm of the mind that, and I'll flip over to the daily time frame here. I'm of them, and I put the CPI number here. We've been tracking these higher lows here. This got violated, came back down, tested this level here, seemed to not be able to get any. I mean, couldn't go any lower. And then we get the CPI number, we come back up and we retest that line. I think that that continues to act as a resistance level until it gets or it gets firmly violated. And then we have this other area up here to then challenge and then break through. But if if not being pessimistic, but just trying to look at the table or look at the game board ahead that was set before us and understand in the mainstream media, there's going to be, or there's likely to be a considerable amount of FUD still. The SEC's got a whole bunch of these enforcement actions, like probably up their sleeve. They certainly aren't going to stop with Kraken. I'm notorious for mispronouncing that. Sorry. But I think that it's probable that we continue to consolidate in this area until some wet blanket gets lifted off, something that indicates that from a regulatory standpoint or politically or something within the administration, the war against digital assets and things around trying to quote unquote protect the public from these things, because for all the dumb reasons that people need to be protected, we all know what this means. Underneath is that the banking industry feels threatened by this. They haven't figured out how to get right in the middle and profit on both sides of the transactions that are going to be happening. And until then, I don't know. I don't know what the good news is. I'm not bearish in a sense, because let's zoom out a little bit. We see that this wedge has been developing for months, months and months and months. And I would argue that if we're in for, I'll get back, goodness gracious, if we get back, what I'm trying to communicate here is that as long as we have some of these headwinds, I think it's entirely plausible that price continues to drift back down to find buyers that are willing to be in the trade during times like this instead of just sitting on the sidelines. So this we'll transition over to the Bitcoin chart in a second, but this is what I'm seeing and how I'm positioned right now. Again, it's not financial advice. Do your own research, make your own trades, manage your own risk, and Godspeed. Flipping over to the Bitcoin chart, this is a 4-hour. Now, what's interesting to me is that we were tracking in this lower channel. We broke through. It held. We got rejected at 24,000 effectively, and we drifted back, retested the middle of this like move up from 22,007 to 24,1, and then came back down. This is last Thursday the 9th, and we've been hovering back at this support level. Very interesting to me that this really strong move higher. The way I interpret that is that there were people that were not sure about getting in, waited, watched all this play out, and then are now supporting the market back at this level. Two things. I'm interested to see that this didn't go lower over the last couple of days. Very interested in that. What I'm also interested is asking is why haven't we blasted through this blue line yet? And looking on the daily time frame, zooming out a hair, we see that this last October, November-ish range was a pretty like hotly contested area that once again became hotly contested in January. and then we had a very strong move higher, but just couldn't get back over this previous resistance level. I mean, this is a pretty hard fight, but we pulled back. We didn't pull back to terrifying lows of 19,000, 18,000, something like that. But interesting that we're holding here. So this support level is intact for the time being. Again, I don't know what the catalysts are going to be, but if you, I mean, the temptation from a trading standpoint was to, as we came back down, was to try and sell this short term. Not that I'm a bear, I'm all about some Bitcoin, but from a trading perspective and thinking about trading for income, the temptation was to sell this, but it hasn't violated these levels. Or if these levels get violated, then it's likely that sentiment has changed. So, but until that happens, we're not short Bitcoin on from a trading standpoint, but we have absolutely been accumulating spot Bitcoin to hodl to kingdom come whenever that time is. Moving over to Aptos, interesting. We're still short here, even though we're getting kind of close to our stop. I haven't decided to cut this because we're kind of stuck in this range now. And the rationale is that we're looking for it to break through, like definitively. We got down to here, which is we got in over here. We got rejected up here. We came back down. We're stuck here for now. I if this gets violated, I'm looking for this level up here to become support again, to then retest this level up here. But for now, the thinking is that given the conditions and what's going to be floating across the wire in the media is that we see price drift back down, and our risk is managed. We don't really have to worry about it. Looking at FTM, we saw this. Excuse me, sorry. We saw this really strong move up starting in January. Consolidated, pulled back slightly. Very, very, very interesting price action. Very bullish. We got up to this 67 cents and held out for a little bit. This is a daily, so for 2 days we couldn't get over that. We pulled back a little bit. Powell did his thing, and we came back and settled in this support zone right here. Interesting to see this perk back up to this now resistance level. So watching this to see how the price action develops in the next few days to whether or not the market is ready to either come back and test this 35-cent level or even this 30-cent level, or if it wants to push back up and pop through and take a rip for like where it gets really interesting, like up in this like basically dollar, not 95 cents to a dollar range, where like pretty substantial resistance on the chart. So that's FTM. SHIB, the little Shibas. Uh, Man, I got to tell you, on this Sunday, when I saw this perking through, busting through this level, I was kicking myself thinking, golly, I absolutely missed this. But this is a great lesson, is that sometimes it's better to miss the initial impulse and then get in when you get confirmation. Again, from a trading standpoint, because if I had chased this up, I probably would have said, okay, well, I'm back at support, and I would have set my stop down somewhere in this area, maybe a little bit below the line. What's interesting is that we came back and we're effectively retesting this lower wedge line that has been developed back since, or basically it's been developing the month of January, which is, or the last half of January after this wedge broke out. Very bullish in my opinion, very strong. Given I've watched Shiba for a year and watch it have these little rips and then just dump. Unbelievable to me, but it is what it is. So looking at this, what I'm looking for is continued support along these higher lows, and then a resurgence back up to challenge this. This 15,745 with 4 zeros in front of it. If we can blast through this, then that's the time to get long and then manage your risk. Moving over to Solana, interesting. we broke down after retesting this level. So through all of like here's the beginning of February, we moved up, got rejected for one, two, three times rejected, pulled back, got rejected again here, pulled back, caught some support, and we've been rejected twice now. Still short. I mean, we're kind of close to the stop, but it's not. I didn't lose any sleep over this because I'll keep saying it again. The risk is managed. We're going to pull back. Well, I think what's going to happen, if depending on what people are thinking and feeling over the next few days, we might drift back down and retest this level to see if there's buyers that are sitting down here, or if they're going to be back down in this, if they're really back down here in the like $16 range, $16 to $17 range. What I would like to see is if it does run up, if it gets us out of the trade, does it stop here and then pull back, and does it retest? I mean, what I'm looking for to get long is for this to challenge this area here and then break through and then get long above 20, basically above 27. Uh, Ape coin. I was kind of chuckling in another chart review that I did with Josh. This setup looked like it wanted to go higher, but it didn't. And then it came back down and tested this lower level and then broke through. And then the rationale a few days back would have been to sell this rally, this little move up, and then you might have gotten paid if you uh, took your profit here. But interesting to see that over the last couple of days, again, this is a 4 hour chart, but over the last day or so, we've moved back up, but we're kind of stuck in this congestion zone. So I would look for maybe to come back and do like a mini head and shoulders where we caught support here, catch it here. That might indicate a move back up. But I think that once we get up into this basically 580 to $6 range, and this right here, we're going to catch some resistance. Remains to be seen. Another chart here, sushi. Looks like we had the right idea uh, to be short. We got short, but it's pulled back basically to this resistance level. We'll see if it can't definitively move higher and get back up into this range and challenge this zone right here. Then I think we pull back a little bit. But I mean we're still in this short. I think the overall market might be feeling a little bit weary, given some of the unknowns about like what's happening in Fedland, in the Biden administration, and in like the banking industry, and some of the things that people are experiencing trying to buy. Uh, Trying to buy crypto with their credit cards on certain types of services like Exodus and others that offer fiat on ramps, that are getting rejected. Those purchases are getting declined, not because they don't have available credit, but because the bank is standing behind policy saying we don't support the purchase of this type of thing with our product. Our financial products and services are not authorized to purchase this. Doesn't matter what you think, Mr. or Mrs. Customer. So we'll see. If we get knocked out of this, we'll wait for confirmation, either higher or lower, to take another position. Near is another interesting setup where we kind of we're heading button up against this 270. Got head faked, head faked a little bit, and came back and retested this level, but it pulled back, perked through the lower end of this wedge line here, came back, retested, it got rejected. We come back. I mean, very similar price action to me, that we would just wait for this to either drift further down. If we were considering to go long, wait for it to come back to say like the $1.80 to $2 range, where there's appears to be a pretty decent amount of support. But we'll see. We'll see. Render's an interesting one that, in the face of all this madness, uh, develop this nice, effectively like bull flag, in my opinion. That's what I see when I look at this. Perked through, came back, tested, didn't go lower, broke through again, but then pulled way back to this level here. But interesting to me, perked up here, and we extended this line out because we saw that this price was collecting and getting rejected here, but very strong in my opinion, this move up today. So we perked through this line. I would look for this to come back and kind of bounce off of this and collect before moving up to retest this resistance level here. But zooming out a little bit, putting this in perspective though, we go back to last May. This was a pretty hotly contested area, so it shouldn't surprise anyone that after this, starting on yeah, basically starting at the beginning of the year down here at 42 cents, we ripped all the way up to $2.15. And somebody who was long for all or most of this might say, you know what, this is a pretty strong resistance area, so I'm going to take my profit here. And that makes perfect sense to me. And until we violate that area with with like definitive price action, then I think that's the way it's going to go. So, and forgive me, I'm streaming by myself, and I'm going to say hello. Thanks for joining. And wait, why isn't that? Good gravy. It's not letting me. I can't even type in my own chat. Forgive me. But if you're joining and I missed you in the chat, I'm sorry. I apologize. Anyway, looking at VRA, interesting that uh, starting in January, started collecting into this wedge, broke out, collected again. This is pretty impressive. If I had gotten long on one of these two moves higher, I'd still be in the trade, but we didn't because we missed it. But looking back, very interesting how strong this is, given how others are behaving. Now take another look at last chart here, the graph GRT. I'm going to zoom out a smidge to say that we've been since last June has been kind of collecting in this zone, and like from a risk reward standpoint, this is really good risk reward if you want to be long. And what you were looking for is some significant level to get violated, and that really began, like from my perspective, that began as we got into this 7 to 9 cent range, and then bang, there was this day. It was the 4th of February, so 10 days ago. This basically 10 cent level, it took off and really started to rip, and has pulled back and tested this 13 cent level here twice now. And here we are on CPI day, and we had price go back up to the top of this little range, this box that it's in now. So what we're looking for is for it to move up to about 20 cents, see what happens. If price pulls back and can gain some support in this like 17, so the 17 to 20, we start to collect and form a wedge. And then that gets violated to the upside, we'd be looking to get long there, maybe. If it breaks down, then we would look to get long again at about 10 cents, because that to me is like the point where if you were watching this and wanted to take a significant position or substantial position, it ran away from you. And you know, do what you like, but I wouldn't have wanted to chase this because I'd be frustrated right now with like, Argh. Anyway, that is a bit of chart review. Remember, do your own research. We are looking forward to, as we develop this live stream, to make it more interactive, and doing this with Josh on the other side, so to speak, will make it more interesting, talking about some of the things that we see going on. So anyway, I'm gonna hop off here in a moment, but just to kind of recap for the rest of the week, we've got Fed talking heads, we've got some other like relatively heavy-hitting economic announcements on the economic calendar. I would recommend that you start paying attention to what's going on in the macro, like things like what the Fed's doing, other things that have influence on interest rate policy, like how the economy is doing or the perception of how the economy is doing, what the administration is saying. And we'll do our best to try and just tell it like it is and make it worth your while. And we look forward to seeing you in the next one. So enjoy the rest of the day and keep an eye out for all those Fed talking bubbleheads, and we'll see you on Wednesday the 15th.